How's it going, everyone? Welcome back to Black Room Trade. As you can see, the setup is a little different today. We're coming to you from Bali, Indonesia. The weather is incredible and it's nice to finally get some sun. And heads up, my voice sounds a little weird today because I'm fighting off a cold I caught on the flight over, but the stories today are too big to skip. We need to talk about why Bitcoin dipped, the subtle shift in Fed policy, and why the banking sector is suddenly rushing into crypto. Bitcoin took a hit overnight. While everyone's watching the charts bleed, the smart money is quietly building the bridge. So let's start with the immediate question. Why is the market red today? It comes down to a shift expectations. Now this week, the Federal Reserve decided to hold interest rates steadily. Now that decision itself wasn't a surprise. The market had priced that in, and the problem was the tone. The message was clear. Inflation is still sticking around, and the job market is steadily enough that they don't feel the need to cut rates just yet. Now this mattered because crypto assets are highly sensitive to easy money. Investors were betting on rate cuts arriving sooner rather than later. When the Fed pushes back against that idea, it drains the liquidity. The market realized that the flow of cheap dollar isn't turning back on tomorrow, so traders de-risk. Adding to this anxiety is the uncertainty around leadership. With the potential changes at the top of the Federal Reserve, market hates uncertainty. So when investors don't know who's going to control the monetary policy next year, they tend to sit on their hands or move to cash. Now, if you want a confirmation that investors are nervous, look at what happened with gold. On the 28th, gold didn't just go up. It shot up to a massive new record, breaking over 5,400 an ounce, and that is a historical move. But watch what happened immediately after. It crashed right back down, and traders did not hold it. They sold into the strength to take profit immediately. This is a classic behavior in a fearful market. They grab the profit and run back to safety. But if you stop looking at the price action and start looking at the infrastructure, the story changes completely. While retail traders are panic selling, the biggest financial institutions in the world are launching products. Fidelity just launched its own stablecoin FIDD. This is a critical signal because Fidelity isn't just offering you a way to buy Bitcoin anymore. They're building their own digital dollar. They want to own the payment rails. And when giants like Fidelity move into stablecoins, it validates the entire technology stack. They're betting that the future of settlement is on-chain, and they aren't the only ones. Western Union, the company that has dominated traditional money transfer for decades, just launched their own stable on Solana called USDPT. Now, Western Union using Solana is a massive endorsement of blockchain speed and efficiency. They're upgrading their backend from old banking wires to high-speed crypto network. Now, we're also seeing this growth on Coinbase base chain, where stablecoin usage jumped 121% last quarter. Now, this data tells us that the plumbing of the financial system is being rebuilt right now, regardless of what the Bitcoin price is doing today. So why are they doing this, and why the rush? Now, I believe that this is about survival. Standard Chartered released a report estimating that US Bank could lose up to $500 billion in deposits to stables by 2028. Now that is $500 billion leaving the traditional saving accounts and moving into digital wallets. The bank sees the writing on the wall, and they know that if they don't offer a stablecoin product, they will lose the customers to someone else who does. Now this is the real story of this cycle. It's not just about number go up, it's about money migrating from one old system to a new one. So here's the takeaway. Yes, the screens are red today, and the macro environment with Fed is tough, and uncertainty is really high. But zoom out, when you see names like Fidelity and Western Union building infrastructure doing a dip, that is your signal. The price is volatile, but the adoption is real. So I'm going to go enjoy this view and try to kick this cold. Don't stare at the 15-minute charts too hard. So if you have any questions about the Fidelity move, drop them in the comments. Make sure you like and subscribe, and I'll see you in the next one.